Hi investors, welcome back to Equity India and Research. A new discussion about BankBees. You might have heard about investing in stock market as well as mutual funds. Now we are going to give you insight about exchange traded funds. BankBees, it is one of the exchange traded fund in which you can invest your capital in exchange traded fund instead of investing directly in stocks. This is the concept of ETF. This is called ETF, means exchange traded fund. What is ETF exactly is, for example, if you buy Nifty shares or Bank Nifty shares, you have to buy each one separately and you have to invest huge amount to buy all those shares to make your portfolio. So here it is one opportunity for you to get a copy of those companies' shares into your portfolio by paying less amount in the name of ETF. For example, in Bank Nifty or Nifty, there are 50 companies. Similar to that, in BankBees also, there are companies related with banks. So instead of buying all these companies, you can buy a copy of those shares in the form of ETF or exchange traded fund. This is the real concept behind it. Now, people are investing in both shares as well as in ETF because they can invest in real company shares and in the exchange traded fund as well. But if you look the safety while investing, exchange traded funds are more safer than equity investments, because while you invest in equity, you need a lot of knowledge behind it and you have to watch the market regularly and you have to observe and analyze your portfolio and you have to keep on doing a lot of things on a day-to-day basis. But if you buy any ETF, then you just watch only the market. You don't need to worry about the companies or any other things. So this is more comfortable and you can relax by investing in exchange traded fund. Now we are talking about BankBees. It is representing 12 banks in this group. They are HDFC Bank, ICICI Bank, Kotak Bank, Axis Bank, State Bank of India, Federal Bank, RBL Bank, Yes Bank, IndusInd Bank, Bank of Baroda, Punjab National Bank, IDFC First Bank. These are the banks involved in the group of BankBees, and you will be getting a copy of these companies' shares in your portfolio as BankBees shares. Now let us talk about the price valuation of bank Bs. Here, let's take the example of today, which is 5th February 2021. The market rate of bank Bs today, it was trading at 360 range. But if you look at this graph, where from 2007 till 2020, you can see that this graph is consistently growing and falling ratio is very less, which means bank Bs are connected with our country and our economy. And if the company is doing fine, if the markets are doing well, then bank Bs will do great. If something goes wrong and if it affecting our GDP badly, definitely bank Bs can go below, or any pandemic situation like COVID-19 this year. Same like all other index came to a lower level, even bank Bs ETF also coming down. That you can see in 2020 there was a crash. So growth and correction also possible in exchange traded fund, but compared to equity investments, the risk ratio is very less. This is I want to tell you first in this session. Second, let me ask you why to invest in bank Bs. There are many reasons. One is flexibility in trading. It is listed like any shares in stock exchange and you can trade with real time rates. Second, it is very transparent with real time rate and portfolio disclosure, and cost effective, which has low expense ratio. Like if you invest in mutual fund, you have to pay different fees with the loading and exit and many other things, but here the rates are very low, and end of the day it is very convenient. Just on a demat account and buy ETF like any other shares, and its diversification is good, which means risk factor is less. These are the main factors, and you can trade and invest, and you can be like a fund manager while buying and selling ETF fund, exchange traded funds. And another point why to invest in bank Bs is there are ETFs with gold and other ETFs. If you look the data here between 2009 till 2020, yes, definitely gold ETF is performing very high because public interest to buy gold is very high, and companies holding gold in stock, they will buy gold in electronic format first, and they will sell later. This is one option. But other ETFs also, time to time, year on year, that also growing in our market. So ETF is not well known to each and every investor, and this is being handled by well known fund managers, and they are making great profit by investing in ETF. And I would like to give you one example of Nippon India ETF, you can say Nifty Bees, that is consisting 50 companies of Nifty, and since last 3 years it has given around 15% return. But Nippon India ETF BankBees, it has given more than 19%. Why BankBees are giving higher return, which means the volatility of BankBees are very high. So you should know that when the market is going high, the BankBees will go fast. If the market is correcting, then the BankBees can go down very fast. So this is one of the major point you have to keep in mind while investing with BankBees. Now, BankBees investment strategy, I would like to give you some ideal thought how to invest in BankBees. I have given some buy rates here and systematic investment quantity and amount and selling rate and its return that you can achieve while selling with the current actual high rate. Now carefully watch this slide. I have given you the rate of 337 till 187. How I reach in this rate, I will tell you. The current trading rate and the highest and the lowest rate of BankBees, it is between 367 and 169. Based on these two figures, I have taken a benchmark to invest on certain level. So you can consider these levels of 337, 307, 277, 247, 217, 187. These are the rates you have to keep in mind. And I am giving you one example of one particular figure of 25,000. So if you keep on investing 25,000 rupees every time regularly, end of the day you will be having 150,000 total investments. This is one point. The other side, when you want to sell it, I would like to recommend you to sell the BankBees on its highest possible rates in a year time. So this year we got 367 rupees. So let's consider that you will sell at this rate all these units. So if you sell it with 367 rupees, you will be getting 2,18,725 rupees, which means out of 150,000 rupees investment, you will be getting 2,18,000 rupees profit, which is around 146% return in your investment. My friends, hope you enjoyed this session and thanks for watching. Also, it's a reminder again to you that this is not a stock recommendation, and I will come again with another interesting video. Till then, goodbye. Thank you.